6 stocks for 2025, Part 1. Number 1, ASML. Dutch company ASML makes lithography machines that are used to produce the world's most advanced microchips. These machines are essential to the chip industry and cost hundreds of millions of dollars. Despite having a near monopoly, ASML stock has fallen 30% over the past 6 months, and the company's forward PE ratio has dropped under 30. Weakness in smartphones and electric vehicle sales has impacted ASML's customers and caused the company's revenues to decline 2% on a trailing 12-month basis. Meanwhile, ASML has been investing heavily in new facilities for growth, which has hit free cash flow. But ASML is still a high-quality and consistent business. Management is confident that its long-term targets will be hit, and they recently unveiled a new machine for high numerical aperture with a price tag of 400 million euros. There's speculation that ASML's biggest customer, TSMC, is about to start increasing orders after a couple of slower years. A cyclical upturn in orders would boost ASML's sales and get the company's stock back on track. Number 2, Somero Enterprises, ticker symbol SOM. Somero Enterprises makes concrete leveling machines that are used in construction projects around the world. These projects include the building of large warehouses, fulfillment centers, and data centers. Somero is a small company with a market cap of just £178 million, and despite being listed on the UK stock market, the company is actually headquartered in the US, where it does most of its business. Somero's stock is down 16% over the past 3 years as the company has been dealing with slower sales caused by bad weather, higher interest rates, and labour shortages. These issues have delayed projects, and Somero revenues have fallen around 18% from their peak. Despite the weak trading environment, Somero has managed to stay profitable by cutting costs. In fact, Somero has been profitable every year since at least 2013, with free cash flow margins averaging 20%. That sort of consistent performance makes the stock look too cheap, trading at just 9 times earnings and 13 times free cash flow. The company's got a clean balance sheet and should have minimal downside from here. Number 3, Natera Inc., ticker symbol NTRA. Natera sells non-invasive tests that can be used to detect birth defects, organ defects, and cancer. The company's prenatal product Panorama tests for genetic disorders and is used in 1/3 of pregnancies across the US. With a current market cap of $21 billion, Natera is not a cheap stock, especially when you consider the company is not currently profitable. The company has reported negative $200 million of net income over the past 12 months on $1.5 billion of sales. But Natera is experiencing rapid growth. Sales surged by 64% in the most recent quarter, which means revenue has doubled in just 2 years. Free cash flow also turned positive, hitting 33 million. Natera's accelerating growth is being driven by its Signatera product, which can detect the recurrence of certain types of cancer. The test is seeing rapid uptake across the US, with the total number of oncology tests increasing 54% to 137,000 in the 3rd quarter. More importantly, the test is helping cancer patients get the treatment they need. Natera also has new products waiting approval and a 22q test that hasn't yet been monetized. Natera's future revenue opportunities should keep the stock moving higher in 2025. So those are 3 stocks for 2025, and I own shares in all 3 of these companies. But these are my personal opinions, not financial advice. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.